My bad. So sorry. I forgot about the mic. One more time. Hello, very good afternoon. Welcome to our daily live stream brought to you by DCFX Asia. And I'm yours truly, Abe Layman. And I'm coming to you live from Central Java, Indonesia. And happy to have you with us. And thank you for joining us. And what we like to do today is to go and dwell into the movement of gold, or better known as XAU USD. And before that, as you know, XAU against USD, what we usually do is to look at where the dollar is going, then we'll dissect what's the movement of gold can go for today. So before we start anything, I would like to recommend you have this habit of checking the economic calendar before you start your trading day. Why? Because high impact data may come and shake the market, which might caught you off guard, or which might just uh, take out your stop losses. Then after that, just go back to where it was before. So I suggest before you start your trading day is to take a look at the economic calendar to know if there's any high impact data. If there is, what time is it coming out? All right. And you can always synchronize the timing of the data to your local timing. What I've done for my economic calendar is I've synchronized the timing of the data based on my local timing, which is at GMT plus 7. So for today is Thursday. Sorry, today is Wednesday. My bad. Sometimes I got sent off. So only this morning, the Reserve Bank of England governor spoke with about the Australian economy and all that, and the issue, the GDP quarter on quarter, it has a growth of 0.2%, from a projected growth of 0.3%, and it's actually declining, and that is why the dollar, it becomes a negative number. It means that the Australian dollar got weakened this morning. By now, it's trying to recover a bit. That's what I meant by high impact data. The color is red. Different sites have different colors. I'm comfortable with this, so I just use this. And throughout the day, this afternoon, before we go on air, Swiss has got a slight medium impact data, which is the foreign currency reserves. Not much impact to the Swiss francs, because it's just the numbers and not much data. Whereas the Europe, for the eurozone, the Italian retail sales month of month, the pro- projected number, sorry, the number that is printed is at 0.2%, lower than the expected of 0.3%. So that might make the euro a little weaker. Not that much. Well, after all, this data has it's not high impact, so it's like FYI, for your information only, good to know, but don't get sucked into all this data. The high impact data tonight is at 9 p.m. The Bank of Canada rate statement, and the Bank of Canada will issue the overnight rate, or their central bank rates. Currently, it's at 4.5%. Will they remain the same? Most likely it is. But how much of the Canadian dollar impact the rest of the market, the rest of the world? I wouldn't say that much, because Canada is not it's not an industrialized country. It's the nearest neighbor, the northern neighbor of the U.S. Um, Beyond that, economically, uh, yeah, they have Americans staying there, maybe because of lower cost of living compared to staying in America, I suppose, or even for a colder climate. But industrial wise, the economy is yeah, they rely a bit on minerals, a bit of oil. Sometimes oil movement do affect the Canadian dollar. Sometimes gold movements also affect the Canadian dollar. But more than that, not that big of an impact. But it is a high impact because it is a the central bank interest rate. So that might stir the market a bit. So just watch out 9 p.m. later tonight. All right. Beyond that, not much data. A lot of rate numbers earlier today in the morning. The Chinese yuan, the yen, Swiss, in euro, pound sterling. Well, the impact does not reflect in the market movements. Okay. Now back to the main issue, gold. Where is it going? Before that, what we should take a look is at where is the dollar heading. All right. Let's see if the dollar. Okay, let's see if the tell some. Right. What we have now is the daily chart of the dollar index, and the dollar index is the base where we measure, because the dollar, why is called a dollar index, because the movement of a basket currencies that's that's aggregated into one against the movement of the dollar, to determine the movement of the dollar. So it is a gauge to see the strength or the weakness of the greenback or the US dollar. Okay, now we can see the whole month of May, the American bulls really showed their strength from the first week of the first day of May. It shot up, then it went down a bit, hit a support, which is at 101.025, and that is the number that most economists have stated earlier, that the support, staff support at 101.025, and that is going to be the support for the month of May and the month of June. So, but then it went up, it went past the yearly FIBO of 102.350. It stayed there for 3 days. Then it went through excuse me, the trend ribbon. Just in case for your information, for those of you who don't understand, the trend ribbon has got three moving averages, which is MA 75, MA 100, then MA 125. See, I use trend ribbon 75, 100, and 125 to gauge the trend of that particular time frame. Now, looking at the daily chart with the trend ribbon moving like so, this is an indication that the downtrend is way over, because the trend ribbon is moving sideways, and we are looking at it is being compressed, right? You see the gaps between the 100 and 125, and then the gap between the 75 and 100. Early month of May was big. Now by the time early June is getting smaller, it means that the bears are no longer in the market. As soon as you see the three lines going parallel on each other, it shows that there's no bears, there's no bulls, only the crabs. So it is going sideways, and it will only indicate the bullish sign when the trend ribbon from a downtrend get compressed, it flip After it flip, then it will go up to show an uptrend. Let me just prove to you. See, draw your attention. I compress this, and you can see that in the month of January, this is what I meant by flipping. See, it was an uptrend from September 2022. By the time it reaches November, the MA75 starts to turn southwards. Then it get compressed. After it compressed, then in January it flipped. Then afterward, it was a gradual downtrend, and you can see since early this year in January, the range of the dollar index has been 105 against N100 or 101. It did go as low as here. Let me see how much is that. The lowest it go is 100.779, nothing less than 100. So that's the tough. That's how tough the dollar is. And for the month of January it was a downturn to hit the bottom. Then in February it went up. In March it went down. In April it went sideways. In May it started to go up. Well, along this line, that was the quantitative tightening done by the Federal Reserve that has managed to reduce the inflation rate from a double digit to a single digit simply by increasing the Fed funds rate. All right. So, will the Fed keep on increasing, or will they just hold it there and wait for the response from the market? Then they'll start to reduce the Fed funds rate. That is the thoughts in most of the in the minds of many economists, stating that the US or the Feds may want to cut down the rates from 5.25 or 5.5% lower than that, because they have tamed the inflation number. Okay, so and that is to the whole idea is to stabilize the US dollar, and it seems to work. But in order to have a good victory, the dollar have to go higher than this level of 105.871, which is the high for the year 2023. Right now, will the dollar go higher? Let's enlarge this. Looking at what's happening, this is the yearly FIBO of 104.709. And on this yearly FIBO, you can see the top band of 20 BB started to turn south, right? So the peak for May is lower than March. March was the highest at 105.888, super lucky number. 888. That is the highest for the year, for this year 2023, and in May it only manages up to 104.709, and it looks like a pullback is happening. How low will this pullback go? I would say the low might go to 103. Will it happen in the next few days? There is a possibility. And if you had been watching our previous videos, you can roughly gauge how my analysis go. I use this MA10 as a momentum line. See, when the momentum crosses the mid band of 15 or 20 BB, it means the previous momentum is about to end, right? This is the downtrend, and this is where the momentum line crosses the midband of 15 and 20 BB. This is the moment that the momentum of the bears are gone, over. Okay, now what's happening now today? The momentum line is getting close to the midband of 15 BB, not crossed yet, still close, and the day is still running. So in order to see whether the momentum will cut the momentum line, will cut the mid band. We have to wait till the end of the day. But looking at this, it might go sideways with slight tendency of sliding down. Right? So based on daily chart, it's going to slide down a bit. Now let's take a look at H4 chart. H4 chart is showing that it is going sideways. Why do I say that? You can see the the Bollinger Band, the 15 BB. This is the bottom, this is the mid band, this is the top band, and you can see the three bands all run parallel. It shows that it's going sideways, it's side movement, right? And you can see that the trend ribbon is also going on a flat scale, going parallel, but with the gap between the trend ribbon are getting smaller. See, the gap here is about 231 points between the 75 and 100. Currently, the gap between 75 and 100 is at 171 points. So it's getting smaller. So it means that the bulls are not here. Only the crabs are in the market. Daily chart shows that. H4 chart also shows that. And you can see the momentum line has crossed the mid band of 15 BB. It has yet to cross the mid band of 20 BB. So once it crosses, then the momentum is going south, because at the moment it's going sideways, right? To confirm that it will go down, the momentum line has to cross the mid band of the 20 BB. So that's based on H4. Sideways, slight tendency south side. Next, let's take a look at H1. H1 shows a clearer picture. Let's see if I'm blocking you. Okay, I'm not. Good. Right. We have a tough support that is playing out at the moment, because MA 125, see, it cannot flip. It just go compress. It stayed compressed throughout yesterday. For today, it tried to open up a bit, but the high of the day for today is at 104.3, is lower than yesterday's high of 104.3. So there is a sign of weakness because the high is lower than the previous day high. All right. So, but the bears cannot show the power of the bears to slide, because the trend ribbon is there acting out as support. Currently, it is being held back by the MA 100. Only tested MA 125 once. This is the third time. Earlier in the morning, it tested twice. Then it formed a tweezer. That's why it rebounded up. Now it went up to test the top band, went up, saw the top band, say hello, have coffee, then goodbye, it comes down. Now it retested the bottom band. So, and you can see that the bands, both the 15 and 20 BBs are getting smaller. So it is a sideways movement. All right. Next, let's see M15. Okay. M15 is showing us that the bears are here. But because the H1 is still being supported, so M15 might want to go sideways a bit. Although it has gone through, the it has passed the trend ribbon, right? And when we see a Morobuzu crossing the trend ribbon, this is a good indication that there is a potential of bearish continuation. Okay, so intraday based on M15, yeah, the dollar is weak. It is heading south, and there's no data coming up later this evening until maybe tomorrow. So we can expect the dollar to go south. So when the dollar is weak, the dollar go down, Where is the gold going to go? Well, because the dollar is traded against gold. Oh, sorry, the gold is being traded against a dollar. So we can expect the dollar to be bullish. Sorry, the gold to be bullish. My apologies. Sometimes this slip of throat, I mean slip of tongue, happens. I'll try and talk a bit slowly so that I won't get tongue twisted. Okay. Now, what we're gonna do is we are going to see the gold's movement. Now we really know what the dollar index is going to do, because on the daily chart it shows some weakness. On the H4 chart, it is going sideways. On the H1 chart, it has a tendency to slide because currently it is at a very at a support which is most likely to be broken. The M30 chart, it has gone below the trend ribbon. M15 chart, way past the trend ribbon. M5 also way past. So there is a saying that a journey of 1,000 mile starts from the first step. So usually we look at a smaller time frame, then go to the bigger time frame to know where it's going. When we analyze from the bigger time frame to the smallest time frame to be sure where it really wants to go. So from the smallest time frame, it is going south, it is going down, but and the bigger time frame is showing that yes, it is about to go down. Okay, so that's the story of the dollar index. Now let's take a look at gold. Right, so before we start the gold thing, let's say hello to our audience first. Gold Walker, hello. Hello, Gold Walker. New. Hello, all. Hello, new. Welcome back. Good to have you back. Gold Walker, I like trading gold as my name, of course, sir. Mr. Gold Walker. I'm sure it's a sir, right? Then, Lisaya, hi. Hi, Lisaya. Welcome back, Lisaya. Smith JT. Hey, Smith. Okay, welcome back. Buy and put TP at 1963 and SL 1984. Am I right? Possible? Possible? Alisaya, I think buy gold. Yes, gold is bullish. Uh, Smith J, kind of difficult to see that it going up. Okay, let's see. Let's see if it's really difficult for gold to go up. All right. So we start as usual. We will start from the biggest time frame, which is the daily chart. Let me enlarge this and let me clear all the uh, trade history. All right. Okay. Now it's very clear. I would say gold is bullish. Why? See, the trend ribbon, different time frames have different levels because the trend ribbon is moving average. It is a combination of three moving averages, and it is formed after the price is formed. Fibos and channels is formed before the price goes there. So, as a destination point, so to speak. Excuse me. See, what happened was that for the month of for the month of May, the first 4 days of May, gold went sky high. It hit up to 2079. I think it's a new historical high. Then after the hype had settled down, the following day, during the Asian session, as usual, gold took a dive of 5,000 points. Then it went down and down and down. It has depreciated from the high to the low of May as much as 14,861 points, or $150, $148, right? So when it went down, the first support for gold to say hello to is the MA75, right? Now, after MA75, next, it goes to MA100. And FYI, this is a tip for you. When you use trend ribbon, when you are waiting for a rebound to happen, it will usually happen after price have tested the MA100. The bigger the time frame, the stronger is the support. Okay, so this is the proof that MA100 was the turning point. Instead of the gold price goes to the bottom band of BB20, right? So at MA100, before the end of the month, before the end of May, it rebounded, it recovered, it did about a 30% pullback. Then second trading day of June, it dived. I think because the dollar index went up. All right. Then follow after the dive of 3,400 points, or about $34, it begins to go up again. Why? You see, as you can see, it tested the 15 BB bottom band, and then there is the low MA100 yet to be tested. So cannot reach, it rebounded, now it's going sideways. It is being at a crossroad between the yearly FIBO of 1962.8 and the yearly channel, right? You see, did I mention the bogeyman, right? 1962.8 is the bogeyman for gold at the moment. It became support uh, from the middle of May. End of May, it becomes resistant, and now it's acting as a resistance before it can become a support. So the psychological barrier is at 1962.8 for gold. But looking at the Western pattern that is being formed, this is a double bottom. Not perfect, but it looks like a double bottom. And if you move backwards, you see 1, 2, 3. It can be a 3 river bottom, or it can also be an inverted head and shoulders. So these two are the shoulders, this is the head. It's an inverted thing. So let's say this is the shoulder line at 1988. Okay, so what's the height of the shoulder to the head is at $54, or 5,495 points. So the beauty about Western pattern is that it when it plays out, it will be, you can measure the return or the reversal, right? So the technical books have explained, when you see a inverted head and shoulders, it will go back to as high as the shoulder to the head. So let's say $55 and 55.40 from, this is the shoulder, right? So this is the head, it's going up. The target is another $55. So we can safely say that the target in the next week will be at 2044, 2044. So as we speak, the bullish candle slightly showing its face. It has gone past, way a bit past the bogeyman of 1962.80. Let's take a look at the H4 chart. Ah, sorry, wrong number. Right, this is the one I'm going to show you. Okay, so let's expand this. Right, H4 chart is showing us that the bulls came early, then the bulls met the bogeyman. Maybe it's just the baby bull, or teenage bull saw the bogeyman, got scared, ran away. Now mama bull is about to be present. When mama bull is here, maybe the bogeyman might just give way, or maybe they'll wait for papa bull to come, or the whole family the whole bull family will come and bash through. There is a possibility. Looking at the H4 chart, MA75 also play out a tough resistance. 1, 2, 3, 4, 5 times already tested, but it's okay. The bulls don't give up that easily. And if you look at the momentum line, the trend, the momentum is going to be a bullish momentum. Why? Because the momentum line comes from the bottom, crosses the mid band of 15 BB, then crosses the mid band of 20 BB, and it is moving away from the mid band of 20 BB with the 15 BB mid band following suit. So, and you can see the 15 BB top band is about to turn up north, right? So it is waiting, okay? And based on H4, the bogeyman has passed already. Currently, gold is trading at 1963.90. The gold bogeyman is at 1962.80. I tried to enter earlier, got spooked by the market, so I'm waiting for my next moment. See, I entered here because I was confident that the momentum is bullish, but I got stopped out. Well, I'll try enter again. Let's see. Based on that's from H4, it is bullish and it is going up. M30, right. M30 is a very good trade setup. Why I say very good trade setup? Ladies and gentlemen, please pay attention. Whenever you see this candle, this is a hammer or an inverted hammer with the body below the top band. There's two bearish bodies below the top band. Then the following candle is a bullish candle. This is a beautiful morning star. Why? Because the star is below the bottom band. And this is a very strong bullish reversal signal. And true enough, it rebounded in the past an hour and a half. At the moment, it is being held back by the yearly channel. See, the bogeyman is here, 1962. About half an hour ago, it went past, and this current candle, this current M30 candle is running for 4 minutes already, and it opened above the bogeyman, which is a good sign, which is that it is going to go up further. There is a very high possibility, but having a channel, daily channel, and a yearly channel cross, it might prove to be some resistance. It will take time before it go through, but make sure that to be sure that it has to be strong, the bogeyman must stay as a support, right? So we need to wait for a while. I wouldn't say buy now. It's too tricky. Good level to buy will be around here at 1960, 70. Next level will be at 1959.22. Did someone mention that level? Hang on. Smith, right. So put TP at 1963, SL at 1954. Am I right? SL at 1954. Possible? Yeah. TP at 1963 already done, right? So it's trying to do a pullback. Do you want to sell? I dare not, because uh, once if they want to move very fast, if they want to move, they will move very fast, right? So this is based on M30. Let's take a look at H1. All right. So H1 tells us that the bulls are back. What they do is for 1 hour they work very hard. They went up by $5, 560 points. All right. And then, so after working so hard for 1 hour, they want to take a break. They'll take a break for maybe 10, 15 minutes or maybe half an hour. There is still a possibility of the bulls coming back. As you can see, the trend ribbon is compressed Now it is about to flip. Okay, H1 and M30 says that yes, it is bullish for gold. Let's take a look at M15. Right. Remember, ladies and gentlemen, when you see a candle with body below the bottom band, it is a good reversal sign. This is the one I'm referring to. This is a spin top being supported by the daily channel. Then it forms not a fantastic morning star, but eventually the daily channel managed to make it a support. Now, looking at M15, the momentum line has cut the M15 BB midband, then cut the 20 BB midband. So the momentum is bullish now, right? So before you have the trend, you have the momentum first. The momentum says that I'm bullish. So the trend of bulls, the bullish trend, is about to begin. And whenever you have a trend, there is also a counter trend. So what's happening is after appreciating as much as 900 points or $9, they want to pull back. A healthy pullback will be up to this level at 1960.3. This is the daily Fibo A3 at 1960.30. That is the that's the 50% retracement level of yesterday's high low. All right. If you want to buy, I would want to enter here. I would want to long gold at this level with my stop loss at 1958. All right. Uh, we need to watch the market to see if M15 can bring gold down a bit because the bulls seems to be tired. Let's take a look at M5. Ah, M5 can become scary. Why? Because there is a shooting star. Oh no, this is a graveyard doji. There's no tail at all. He had one super long horn, no body, no tail. So psychologically, this candle tells us that the buyers came, then got hammered by the sellers, then that's it, no more. Followed by the current bearish candle, right? And looking at this pullback may want to go up to this level of A3, 1960, because this is also where the mid band of 20 BB is waiting, and then there is also a weekly channel. So possibly a 1960.3 will be a good support to go long on gold, right? But if we enter there, it can be tricky because they might want to test as low as the weekly midpoint at 1957.66. So that is another support. And I do not want, if I enter the market, I do not want to have too much of a SL level. If I enter here, my SL will be at $200. Not too bad. Okay. Right. So after analyzing the market, I have come to a conclusion that gold is bullish. It's trying to do a pullback, and I think I want to go for a limit order. This is the level I want to enter the market at 1960.30. So buy limit at 1960.35. My SL level will be at 57. Should be safe. Let me go lower. 1957.03. That's for $300. Okay, can do. 1957 even. 57 even. Okay, safe. There. So we'll wait. Um, keep our fingers crossed. Then once the gold come down, touch our price, then you want to go up, we might be lucky. Right. So that's our trade for gold for now, and we'll wait for the movement of the gold to see if our order is working. Let's see how much orders do I have at the moment. Oh, I have a buy in euro earlier. It's making some profit. Let's take a look at euro, shall we? See, I bought here. All right, not too bad. $160. I'm maybe go for a $200 profit. Just wait. So, see, when the dollar index goes down, euro goes up. So when euro goes up, it is a confirmation that the dollar index is getting weaker. So, but sometimes when we trade gold, gold have a tendency of being stubborn, and also because it is a very volatile asset class. So you have a lot of vested interest in gold. So volatility can be scary sometimes. Okay. So is our gold doing? That's our order, the buy limit order at 1962 1960. Currently it's trading at 62.8. Let's take a look at gold again. If I cannot get that price, then I might want to consider of buying market. Buying market will be when I am very certain that the gold is not going down anymore, because it can be scary. I would rather wait. All right. See, this is the M30. Let me expand M30 for you. This is my buying price, and at M30, my buying price is where the trend ribbon 125 is waiting. So if I just poke, take my price, then rebound. So we gotta wait. We've got 15 minutes to go. So we've covered gold, and gold is bullish because the dollar index is bearish. It's getting some weakness based on the daily chart. It is showing some reversal strength, and prices. The bogeyman is acting as support based on the daily chart, but it is still resisting in the smaller time frame. And we have to wait. Now, let's see if there's any more comments. So, Smith JT, kind of difficult to see that going up. Not really that difficult. I hope after explaining how how we read the charts. First of all, you have to know how to set up your charts. Just in case you cannot look for the videos, just come back a few days later. We have some issues with the channel. You may come back later to see when. Just look out for the videos on chart setups. Learn that, practice the chart setups, then practice your eyes in looking out for trade setups. All right, you can see trade setups happening every day. You can watch the previous videos, see how we analyze the market based on the chart setups that we have done. See, after you've done the chart setups, then we look at the movement of the market, then we can tell the kind of trade setup that is available. All right. Uh, then that's how you get rich. But I think profit is not about how much money you get and when you empty, but profit is about accumulation of your transaction. Loss of profit at the end must be profit. Of course, yes, yes. The law of averages does take place in the market. Let's say you make 5 trades, right? Maybe you had three stop losses of maybe 200, 300, 200, 300. Let's say you lost 700, but with these two profitable trades, you make each trade of 600. So two profitable trades of 1,200 against a loss of $600. At the end of the day, you still make money. See, so that is a good attitude to have, Mr. Goldwalker. All right, so don't be too worried about hitting your stop loss. Always look out for next trade, please. All right. So, well, if you prefer to wait for US session to decide, which is also good, but for those of you who wants to try out early or who may not be available later in the evening, you want to try a trade earlier. You want the European session is not that bad. Starting from 2 p.m. to 2 p.m. is when Dubai open. 3 p.m. is London open, and you can trade until about 7:30. New York opens, the US session opens. Then you can do well. The golden trading hours start at 7. Right, the good to start hours start at 2 p.m. My time, your time will be 3 p.m. GMT plus 8 is 3 p.m. GMT plus 7 is 2 p.m. Okay, so well, as long as you know when to trade, when are the golden hours, that is also good. Bear in mind to have that. All right. Next, Peter Pan. I never use TP. If I'm just entry, I always wait and see till next candle shape. Oh, okay. Hey, Peter, welcome back. Haven't seen you for a while, Peter. How you doing? Good, huh? Okay. Well, sure. Yeah, what you are doing, Peter, is what we call screen trading, meaning you look at the market, you watch the market, you monitor the movement of the candle. Not too bad, but it can be tiring because uh, you are working and not your order working. See, when you use SL stop loss and use target profit, because you are sure already that your analysis based on chart setup and trade setup is okay, and things are working according to your plan, then you can put in your order, relax, right? Let the order do the work. Yeah, if you can do screen trading, that is usually for scalpers. They enter and leave the market in matter of minutes. Yeah, they do screen trading. It can be tiring, right? There's nothing wrong in that, right? As long as you are watching the market, you know where it's going, and you can take action immediately, which is good. But the drawback is you might get tired easily. It is quite tiring to look at screen, and your eyes and your brain may get a bit tired. Then you might lose a bit of concentration. Just a friendly advice. If you want to do scalping, yes, that's the way to go. But if you want to do day trade, sometimes you may want to let your order do the work. All right, Peter. Hope it's useful for you. Next, uh, oh, you go Walker. You already enter the market. You want to go at 1967? Yes, possible. Very possible. 1967 looks like my buy limit is not done, and gold is coming up again. 1967. Yep, 1968 will be a better value because let's open up this M30. Why I say 1968 is a better value because this is where 1968 is where the top band is going to meet the weekly channel. See, when you have multiple indicators meeting at one point, it becomes a spot of tough support or resistance, right? Now, we can see that the top band is moving up, pointing up, right? And it is approaching this weekly channel. We can safely say, excuse me, that when the top band meets the channel, will be at around 1968, 28. So, yeah, 67 is okay, not too bad. But if you can make $1 extra, why not? Go for 1968. And with the top band looking upwards, I think they might want to go past. Then the next target will be at 1971 or 1970, around here. And if or when the bulls uh, become healthy and big later part in the evening during the New York session, we can look at 1975 as the next target, because there's the weekly and daily channel crosses waiting to be tested at 1975. Well, this today can be a good start of the bull swing for gold, because the dollar index looks weak. So, but of course, uh, they need, okay, prices have gone past the bogeyman, which is good. Next, you will need to cross this yearly channel, then the daily channel at the same price. This is at 64. I think it can be penetrated easily. Just watch the market. But if you have position, which is good, then have your stop loss, have your target profit, let the order do the work, come back to visit every 10 minutes, 15 minutes. So that you won't get tired. All right. Uh, 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 this is just a friendly advice. It's not something that you must do. No, no. Just, when you trade, you want to be comfortable. You don't want to stress yourself. You want to be happy about doing it. So, and you need to maintain a positive attitude. Uh, and to do that, uh, you cannot get tired. You shouldn't be tired. So don't strain yourself. Right? It's just a friendly advice. Okay. Don't have to take it too seriously. Just basically, when you trade, you have fun. You enjoy doing it. You love it. All right. To me, trading is not work. Trading is I do because I love it. It's a simple fact that I love to trade. That's it. Okay. So who else have we got? Sir, I have advice. So many indicators, yeah, difficult to understand. Okay. I can subscribe to your notion, Gold Walker. Too many indicators, but see, as an analyst, my job, without the indicator, I cannot explain to you how and why the market works, where the price is going, where is the target. Yeah, I'm not 100% accurate. I admit I am not, but I can maintain up to 70-80% accuracy, I think. Right. If you have complaints, let me know. If I have got if I have given a false signal or bad advice, let me know. Correct me when I am wrong. It's okay. I can accept that. I can live with that. And I love that, actually. So thank you for your advice. But I have those indicators so that, number one, we can enter a precision entry. Sometimes we miss the boat, yes. But it number two is we cut down the guessing game, so we don't have to guess a lot, because the indicators will tell the story. The indicators will tell us where the market is going, when it is going, and when will it get there. See, lagging indicators can get the direction of the market. Leading indicators will tell us the destination. All right, that's why I have so many indicators. Okay, so, well, thanks for the advice, Gold Walker, appreciate. But because as an analyst, without those indicators, I cannot tell you anything. I'm blind. If you are, if let's say, trade, let's say I analyze this M15 simply naked. Let's take a look. I can't tell you where it's going. Yes, it's going up. For how long? Where is the resistance? I cannot tell you anything. So each and every indicator that I use has a function. Form must follow function. So with that, I'm able to give you a clearer picture of what's happening in the market and how we can exploit it. All right. But once again, thanks for the comment, thanks for the advice, appreciate it. But uh, that's why I use those indicators I will explain. All right. Okay. Next, who do we have? Lisaya. Guys, buy won't last too long. Possible, possible, but well, Lisaya, looking at the H4, the buy may want to test the first the level of the, hang on, let me enlarge this, all right, so you can see. Okay, see the MA 125 is waiting to be tested. Currently it is testing, is trying hard to push MA 75. Okay, thank you for the word of caution, Lisaya. Yes, there is a possibility that the buy may not last long, but looking at the economic calendar, there's not much data that's going to come out for the US, or data that can shake the movement of gold. And I believe that today it's going to be a technical play or technical trade. So that is why we are doing live trade based on technical analysis, right? So let's see, in the next hour and a half, can the price of gold go above MA 75? This is the price at 1964. Okay, the first stepping stone is at 1954. The next one is MA 100 at 1968, 70 or 1968, 50. Then the big one is at 1971, 50. This is where the weekly channel, the weekly Fibo and MA 125 waiting to be tested. All right. So, well, MA 100 can also become the bogeyman. See, let's say the next 2 3 hours, if New York open, it cannot go beyond 1968, then they might want to pull back. But if it goes through, then yeah, we can look at 1971 or up to 1975 for today's goal target. Okay, all right. So, ladies and gentlemen, all you beautiful ladies and you handsome gentlemen, all you wonderful traders out there, we've come to the end of the program for today. All right. So, ladies and gentlemen, thank you for all the time. Thank you for attending. Thank you for viewing. Thank you for the thumbs up. Please, come on. You, my friend, give me the thumbs up. Please, please, please. Pretty, please. And we've come to an end, and it's time for me to say goodbye. Thank you very much for being here. Come back again tomorrow. We'll do this every day. Same time, same channel. So, whatever you do, don't worry. Be happy, stay healthy, and please trade wisely. Gotta go. Bye. God bless. See ya.